welcome to Nirmal, ladies and gentlemen. I'm Hiral Tatia. We have with us Ms. Neha Singh, Chairperson and Managing Director, and Mr. Abhishek Goel, Vice Chairman and Executive Director at Tracxn Technologies, joining in. Welcome to the show, Neha and Abhishek. And firstly, congratulations for achieving this milestone with regards to an IPO.
Thanks a lot, Hiral. And we are also excited to be here today speaking to you.
Absolutely. So my first question coming to you is, firstly, if you could just help us understand the journey of Tracxn, how did the company actually come into formation? What was the thought process to get going with a business like this?
For sure. So let me start by giving a quick introduction about myself, because that's, our story is actually based out of a problem that we saw firsthand. So I'm Neha, one of the co-founders of Tracxn. Before Tracxn, I was an investor with Sequoia Capital, broadly investing in the technology space. Right? Essentially, I'm a comp science undergrad from IIT Bombay. I graduated at the top of my class, receiving a silver medal from then President of India, Mrs. Pratibha Patil. And then I worked at BCG, the Boston Consulting Group, and then Sequoia Capital. Right? So, then I moved to Bay Area for Stanford, and that is where we also started Tracxn. So US was the first market that we actually started off with. And all our initial customer in terms of venture capital investors, private equity investors, and corporates were all in the 10-mile vicinity of the campus. Right? The essential idea was that if you look at public markets, you have the luxury of a lot of platforms. So if you look at the public market investors, they have the luxury of using platforms like a Bloomberg, Refinitiv, Capital IQ, FactSet. Right? Now, as private markets are becoming large and important, it also requires platforms like these, right? And can we build a global platform in this space? Right? So that is how we started, and we really wished that a platform like this existed when we were investors, right? And probably Abhishek can also, give the first hand of how, he had also independently arrived at this.
So I am born and brought up in Jodhpur, and then did my undergrad in computer science from IIT Kanpur. I was among top 100 JEE rankers in my cohort in '98. And then after graduation, I started my career in tech. So I was at Yahoo and then at Amazon later. And then I became a VC, joined Accel Partners in 2008 and spent 3 years with them investing in early stage tech companies. And we used to do a lot of grunt work to discover companies, or if I like a company, to figure out what else exists in that market. And over time, we realized that we realized two things. One is that every fund is sort of reinventing the wheel. They're doing the same exercise. And we thought if somebody does it centrally, then it will be more efficient. And then second thing we realized was that we can use a lot of technology to actually solve pieces of this puzzle. And over time, when I met Neha, we are both from computer science background, and we were both VCs in our previous lives. And we both thought a platform like this should have existed when we were doing our jobs, and it would have made our lives much easier. And over time, we realized that when we observed public market investors, we thought they have luxury of a lot of platforms and data. And while private market investors had nothing. So we eventually decided to build this ourselves. And this is more than 9 years back. And today we are very happy to be here. We are very excited to go and start our journey as a public company in India.
Absolutely. So, a company that's actually solving, concerns when it comes to a private ecosystem is going public. So, that's great to hear as well. So overall, if you see in terms of the business model and what Tracxn does, for the benefit of our viewers, if one of you could just explain the process and what is it that is, the monopoly or the unique, as a USP that you could call.
Sure. Right. So Tracxn is a private market intelligence platform. Right. We track data about private companies, startups, emerging technology sectors, and its global coverage. Right. So today we work with customers across 50 different countries. 70% of our revenue is outside India, which is primarily people looking at local data from the platform. Right. US is a large market for us. Europe is a large market for us. Right. And the customer segments includes venture capital funds, private market investors, which includes venture capital funds, private equity funds, investment banks, as well as large corporates, wherein we work with their corporate development team, innovation teams. Today, we work with many Fortune 500 corporations as well globally. They typically use it for their daily investment activity, which includes deal sourcing, deal diligence, tracking, doing M&A, tracking emerging sectors in their different industries. Right? And in terms of the model, the company, it's a SaaS-based platform, like typical your financial data platforms. Like it's a SaaS-based platform with subscription revenue. So 100% of our revenue is subscription revenue. Users pay on a login-based pricing. So our average pricing across, so today we work with more than 1,000 organizations across 50 different countries. Average customer pays us 6.5 lakhs, for the subscription. So that's brief about the platform. It's a fairly comprehensive private market intelligence platform wherein you can find data about companies, about emerging sectors. For instance, if someone wants to see what is going on in cybersecurity or AI or big data or EV as a space or agri-tech, right? They are able to find out all the companies which exist in that market. They are able to find out what are the different upcoming business models coming up, or which are the areas wherein companies are becoming large within that industry. So that whole process of what I do as an investor in the private markets on a day-to-day basis, that becomes very efficient.
Right. So my other question, what intrigues me right now is that the private sector is highly fragmented, right? So getting data from a private company is fairly difficult. So how does that process of getting the supply side of the data work?
Right. So I'll tell you a brief about how we sort of source the data. So if you look at it in our platform, you have data about companies, you have about industry sectors, transactions, funding rounds, M&A round. You also have private company financials, cap tables, who owns how much, valuations, what were the valuations at which the companies had raised round, etc. If I were to look at the source of data, you can broadly divide into 3 key buckets. One is your whole publicly available information about companies. So for instance, if we go to a search engine, you search for companies in a particular sector, you get a set of results. So similarly, we aggregate the digitally available information about millions of companies. Today at the back end, we track more than 500 million entities and websites wherein we are able to get your publicly available information about companies. So that's one key source of data that we have. The other key source is your proprietary data that we create. So we have a 82-member sector focus analyst team who's covering different sectors globally. And they build coverages on the different sectors, for instance, that I talked about, like, like AI, big data, GRC software, lending models, etc. So they build the sector coverages, they build the taxonomy, they understand the business model, etc. So that's the second source of data that we have. The third is your regulatory filing. Wherein we actually, so across different countries, not just in India, but across different countries, private companies also have to do some filings. And this is available in variety of languages based on which country you are getting the filings from. But there's also inclination from governments to have information about companies because that increases transparency, that increases investment in their different geographies. So we are able to get those regulatory filings, standardize it, make it actionable for the users. Right. So this, I would say, is broadly the source in which we get information from the company. So we actually don't wait for the companies to contribute information because that comes actually much later. But we ourselves do a lot of heavyweight lifting in getting information about companies. Right. And coming to the second point, which is, what are the moats that you can see in this business? So one is obviously, technology is one key pillar of building a global data platform, I would say, because you're working on very large data sets. So we today have, for instance, more than 80-member team across technology and product team. That is one of the key things, and we aggregate huge amount of data. Today, we aggregate more than 500 million entities, I was saying last year. So that is one key pillar of data. I think the other, I would say, moat that we see in our business is, the cost arbitrage. So our entire team is actually based out of India. So you find it very interesting that, our entire team is actually based out of India, but we serve customers globally. So we have, 70% of our revenue is outside India. We serve customers in all these countries. But interestingly, our whole data production actually happens in India. In fact, interestingly, our sales also happens from India. So you have people who are based over here and they work across the time zones, right? So that gives us a very interesting make in India, sell globally cost advantage, which is a very significant and long lasting advantage. So we enjoy the cost structure, of building in India, as well as the price points for global customer base. So I would say that is, the second interesting, long-lasting mode that we see in our business. And third is obviously that, sorry, go on.
Yeah, go on.
Yeah, and third is obviously that, you require domain expertise to be able to build a platform in this space. So both me and Abhishek were earlier private market investors. I used to work at Sequoia Capital. Abhishek used to work at Axel Partners. So we also know firsthand of the pain points which is there in the customer segments, and that is why there's a lot of domain expertise that also requires when you're building sort of a data platform in this space.
Right. So with all of this said and done right now, as you mentioned, majority of your revenues come in from outside India. So what's that revenue breakup in terms of geographies looking like?
Yeah. So 70% of our revenue is outside. So 30% is India, 70% is international. If I were to split that, US is the largest. So 27% of our total revenue is from US last year, and the remaining 44% is from EMEA and rest of APAC.
Okay. And overall, if you see in terms of growth as well, do you see there is more demand coming in from outside of India, or do you see demand increasing from within India as well?
Right. No, that's a good question. So right now, all the regions are growing, fast for us. For instance, last year we grew, so we closed the year at 63.5 crore of revenue from operations, 65 crores of total revenue, which is a 44% increase over the previous financial year. And all these regions of both India International as well as US EMEA actually grew at a fairly fast pace of more than 40%. So we are actually seeing sort of good growth in terms of in terms of all these regions. I think the other reason is also that the addressable universe is much large. Like the addressable, like today we work with 1,000 plus organizations. The addressable universe is of 100,000 organizations. And the market of private market, if you look at it, the private market AUM crossed $9 trillion last year, which has become fairly significant. Even if you're comparing that in the context of public market, like a typical LP allocation to a public and a private. So I think that is one of the reasons that we are also seeing a lot of growth, because there's a lot of headroom to grow.
Right. And overall, with this, another question that comes to me is the consumption is B2B, what I understand. But is this a B2B consumption only from an investor community, or do you see a lot of B2B consumption from that sector perspective? Because a lot of startups today, when they want to do a competitive analysis, when they're building their own pitch decks, etc., it becomes absolutely crucial for them to understand that side of the story. So is there consumption increasing from that side of the table as well?
Right. No, that's a very interesting question. So if you look at it currently, our customer base, if I were to say the core customer base, these are two core customer bases. So one large is your private market investors, which includes your venture capital funds, private equity funds, investment bank. The other large is your large corporates, which includes your Fortune 500 corporations, wherein we work with their corporate development team, innovation team, technology offices, investments team, right? So these are the two key buckets of customers that we work with. Having said that, private market data is also relevant to a lot of other segments. For instance, startups, for their M&A activities, it might be relevant for, or LPs is also looking at fund performance data. It is relevant for them. In fact, it's also relevant for product discovery. For instance, if you want to figure out upcoming products in a particular sector, that's very interesting. For sales as a use case, if you're targeting to cater to the private markets, because that is also becoming sort of large as a sales segment, that is also there. So these are the segments wherein we actually have some customers, but our core, I would say, still is probably private market and your large enterprises as the core segments. But yes, private market data is actually also becoming increasingly relevant for a lot of other segments, which we do see some traction in that. And, over time, we want to go more deeper into these as well.
Right. So getting into these segments of startups, etc., do you think price point will be something which you will have to consider and probably offer that at a slightly lower price point depending on a sector specific view? Because startups, for them, when they're just growing, these kind of expenses is something which they always think about, right? That is this something which is going to be relevant to me? Is this something which I really want to spend at this point in time? So how do you solve for that problem then?
I think when we reach there, I think we will need to figure out what is so for every target group, you have to figure out the relevant pricing and you have to target that. So I think we will sort of address that when we get there. So far, we have sort of prioritized sectors which are more cash rich and where there is more direct fit in terms of the daily use flow, workflow. And as you expand categories, you'll have to discover new price point, new features. They will also need different features to actually over time work on them. But I think these are markets where we have optionality today. We can over time build some more incremental features and make it relevant, discover a price point that is relevant for them, and we will go there.
Absolutely. And overall, an interesting factor that I saw from your financials as well, that the kind of growth that we are seeing with regards to the revenue base versus the increase in terms of costs, there's a wide difference, right? So do you think you will be able to maintain this kind of a ratio going ahead as well? Or do you think once you start further expansion, this gap will start getting narrowed?
Right. Right. No, that's a very interesting point that you actually mentioned. So this is one of the interesting aspects of, in general, I would say B2B data businesses that we also enjoy. There is a good amount of operating leverage in the business. What that means is, for instance, if I have the data, for instance, for a particular country like India, and if it is relevant for a few set of investors, the incremental cost that I have to incur for getting new customers is very minimal, because that data is also relevant for a large set of customers. And for the same reason, if you look at it across the last 3 years, our revenue grew across all the last 3 years, our actually revenue grew at a faster pace than cost. And if you look at the CAGR, so the revenue grew at 30% CAGR, but the cost only grew at 4%. And interestingly, if you look at just last year, FY22, we added nearly 20 crore of incremental top line, and out of which 78% or 15.5 crore actually went directly into the bottom line. Right? That is also the reason why you can actually see a very consistent margin expansion that has happened over the last 3 years. For instance, our PAT margin increased from a minus 36% to a near break-even in FY22 to positive 4.5% in this first 3 months of the current financial year. So that is actually very interesting, and I think that's the nature probably of the business that you enjoy. That you obviously, in the first 5 years, if you were to see, we invested a lot in technology in building the data. And if you look at in the last 12 months, a lot of our headcount increase investment has been in the sales and marketing engine. Like if you look at it in the last 12 months, we increased the team by 150 people, out of which majority of the headcount was in the sales and marketing engines, right? Which because you can basically leverage on the same built technology platform and the data and everything. So that's one interesting aspect, that is of the business.
Right. So what is our per subscription acquisition cost currently?
Right. So it is fairly minimal because of two reasons. One is there is like our sales team, etc., is also based out of India. So there's a cost arbitrage which is there, right? You are selling in dollars, but your sales team is based out of India. They work across the time zones. That is one. The second reason why our customer acquisition is also very efficient is because of our marketing engine. So for instance, a lot of the companies may have to do paid marketing to acquire customers. Because of the fact that we are a data business, we are actually able to create a lot of data. So we have data, for instance, through public pages, through newsletters, through reports, etc., through which we are able to acquire a lot of new customers, and in a very cost-efficient manner. So we don't do a lot of paid marketing at all. We actually do a lot of content-based marketing. Right. So because of these two reasons, I would say both on the sales side, how we close accounts, as well as on the marketing side of how we acquire new leads every day, our customer acquisition cost is very efficient.
Right. So overall, how much would it be as a percentage of sales right now?
So the details that we have given is out of, if you look at one proxy, which is the team size. So out of the 808 team members that we have as of end of Q1, nearly 220 were in the sales, marketing, and customer success functions. Marketing is basically for acquiring new accounts. Sales is for closing the accounts, and customer success works for acquisition as well as expansion of the account. So I would say this is sort of one proxy of how much we sort of spend in these functions.
Right. And overall, if you see in terms of the recurring subscriptions, what's that attrition looking like in terms of subscriptions?
Right. Yeah. So that is, I would say, one of the interesting aspects about subscription business in general, that you acquire customers, and a lot of them actually continue over the years without you having to do incremental sales effort. So for instance, if you look at across the last 3 years, we have had a renewal rate of about 74%, for instance. However, like how many annual subscriptions were due for sort of renewal this year, and how many actually renewed. So that has been 74%. And another interesting data point, if I were to say, is, for instance, if you look at our customer base, that has grown at a fairly good pace of 30%. But even then, if you look at at the end of Q1, 23% of the customer base have been with us for more than 3 years. Right? So this is one interesting aspect about subscription, that once you acquire a customer, a lot of them actually continue to stay on, and you don't have to spend incremental sales effort in getting that part of the revenue.
Right. And overall, if you see in terms of the IPO, it is a complete OFS, right? So no funds is something that is going to the company. So anything else that we have in plan in terms of expansion from here on?
Right. So there are two reasons. Firstly, for actually doing OFS. One is the company, as you can see in the numbers, is profitable. Secondly, the company, we had raised 113 crores of investment from venture capital funds, angel investors earlier. We still have 43 crores cash in bank as of end of Q1. And the third interesting thing is that we also have negative working capital. Right. So the revenue that you actually see is accrual based revenue. We actually do invoicing and cash collection upfront for the entire subscription period. So if you look at our cash flow, we were positive net operating cash flow even last year, generated positive cash flow, and that has also increased in Q1 as well. So we have been sort of cash flow positive and adding money to the treasury for quite some time. Right. So that is the reason that despite us being sort of fairly aggressive in terms of the team growth, etc., a lot of that is actually being able to fuel by the cash that is being generated by the business itself, right? So that's on the first part. And the second part, like what are the plans that we have for expansion? Obviously we feel that the market is very deep, so you want to basically leverage. Today we are among the top 5 players in terms of in the private market data space in terms of the companies that we cover. So we do want to leverage our current position. So you will see us probably continue to work on new customer acquisition. So even if you look at the customer acquisition, we increased the customer base by nearly 70% across the last 3 years. So that is likely to continue. The second thing is that we also work on growing the accounts. So if you look at it, average account, we work with 3 users on an average per account. But we are also able to increase the number of users as people typically start small and grow over time. So you're also able to grow in terms of number of users within the organizations, or you can sell to more teams within the organization. So you're also able to grow within the existing organizations that you work with. So I would say these are the 2 key things. And obviously the product continues to sort of grow at a fairly good pace. So that you are sort of eating into more of your workflow, time spent, etc. So that continues to be one of the focus, I would say.
Right. And overall, if you see in terms of, as you mentioned that we are in the top 5, if you have to see in terms of market share from the existing players, what would that stand at?
Right. So if I were to say the market of private data globally, because we are in a vertical industry, it is not very competitive in a sense that, if you were to compare it to a horizontal industry where you have dozens of players, globally, we only have 5 or 6 players which exist in the private market data space. And currently, it's fairly differentiated. Like the data sets, for instance, we have a very deep coverage on thematic, on sector-based data, right, which is fairly unique and differentiated. So there's a fair amount of differentiation which exists across players, right? Having said that, in terms of market share, there is very little data that exists because, I would say this market has become large in the last decade and growing at a fairly fast pace. So there isn't so much data about that's there, but right now actually the market, like a lot of the players are growing with the market in a sense. You're not sort of eating the market share so much.
Right. But okay. So, I understand from that perspective, Neha, but my question coming over here is in terms of what is that plan going to be with regards to scale up also? Because yes, we will have a workforce who's going to target a lot of companies, but then that universe becomes limited, right? So is this the only thing that we're going to target in terms of scaling as a business, or is there anything else that could be added as a value added service?
Yeah, sure. So we feel that our core segments, which is your private market itself, is very deep, right? Like it's another way to think about it is if you look at a typical LP allocation from a public market to private market, that has already become 1/10. If an LP, so the LP allocation to private markets is also something which has been increasing. So this market itself is fairly deep, and we feel that you can actually create a large company out of it, and that is why also listing, and we want to sort of continue to build this company over the next, 3 decades. So that is why. So this is going to be one of the core focus. Continue to build in the private market data space. Having said that, as we were earlier sort of discussing, there are some of the segments for which private market data is also relevant. For instance, like you were saying, for the startups themselves to understand what is going on in the market, anyone who's catering to the sales use case, limited partners, etc. So there are few other segments for which this data is also relevant, which we will cater over time. But I would say this market itself is fairly deep, and we feel that you can create like a large company in this.
Right. And do you think we will need a further fundraise that could be needed in the near future to achieve the growth plans that we have?
Yeah. So the business, if you look at across the last few years, after the initial funding that we raised from venture capital funds, from very marquee angel investors that we sort of raised, the company has been able to sustain through the cash that is generated out of the business. And we don't foresee anything different to sort of happen, because even if you look at like your net operating cash flow has been increasing across the years, your profitability has been sort of increasing across these years in a fairly linear manner, across all. So in that sense, we believe that a lot of the sort of the expansion, the business is able to sort of fuel based on the cash that is being generated. So yes, but we are fairly aggressive in terms of sort of scaling or plans for scaling, because you do want to sort of tap into the opportunity and the position that you've already built in this space.
Absolutely. And very lastly, Abhishek, Neha, anything that you would want to give the investors?
So I think broadly we are sort of so we sort of started when we started this company, we always wanted to list in India. And we started the process about more than a year and a half back, when we actually turned sort of close to cash flow positive. And that is the time we thought that Indian markets are sort of look at, though we are a tech company, where I would say that was one of the things, that this is one of the things that Indian market sort of likes, and that is how we started the process. And I would say we are sort of excited to list in India and continue to sort of grow the company for the decades to come.
Right. In fact, another question that comes to me is, when you mentioned about listing in India, I mean, overall, majority of your revenues come in from outside the country. Would it actually make sense also to probably have another listing with regards to any of the international stock exchanges?
Right.
So
right.
I think we haven't planned anything right now. I think we are all born and grown up in India. We always had aspirations to like be a company based out of India, and I think at some stage when we become much larger, and if it makes sense, we'll do that. But I think we believe India is a great, phenomenal market, and to build a public company out of. And I think it's more of an aspiration for all of us to build a company which can become like our parents always talked about public companies, which sort of they invested in, and it helped them in their tough times. And we want to be that, always acted as an inspiration story for us. And
absolutely, I mean, absolutely, very well said. So thank you overall for speaking to us as well. Thank you, Abhishek. Thank you, Neha. Congratulations on achieving this IPO, and good luck for the listing as well from here on and for the coming quarters and years.
Thanks a lot, Hiral. Thanks for having us.
Thank you, Hiral.
Always a pleasure.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.